Welcome. This webinar is brought to you by the University of Hong Kong's RegTech Lab, Building Better Financial Systems, as well as the Center for Finance, Technology, and Entrepreneurship, the world's first FinTech online learning platform. Today's online seminar is based on a recent research paper entitled Digital Finance, Financial Inclusion, and Gender Equality, Strategies for Economic Empowerment of Women. The authors are Evan C. Gibson, Sangita Gazi, and Douglas Arner. Evan Gibson is an assistant professor at the Faculty of Law at the Chinese University of Hong Kong. Sangita Gazi is a research fellow at Rutgers FinTech and Blockchain program at Rutgers University, and a research fellow at Yale Law School, as well as a final year PhD candidate at the University of Hong Kong. Douglas Arner is the Kerry Holdings Professor of Law at HKU, as well as Associate Director of the HKU Standard Chartered Foundation's FinTech Academy. A lot has been written about gender equality, access to finance capital, and economic justice writ large. Indeed, the problem is one that the UN, IMF, and World Bank and G20 have harped on multiple times during the past 2 decades. Things kicked into high gear after the 2008 global financial crisis. A key thing that the authors stress is using FinTech to support gender equality in the post-COVID-19 world. Whatever frameworks are decided upon, they need to be underpinned by FinTech, the authors say, to overcome structural barriers, primarily through the digitization of identification, frictionless and interoperable mobile money, the digitization of government payments, and the utilization of unbiased, sex disaggregated data. By adopting a functional approach, governments can address the underlying social, economic, and commercial factors to develop a gender-enabling society. Policymakers must be aware that although technology proffers many benefits to close the financial inclusion gender gap, it can create new barriers. To that end, a smart policy of human interaction is necessary to supervise technology and intervene to eradicate any inadvertent gender-based technological bias and sexual discrimination. One of the authors of the aforementioned paper is with us today. Sangita Gazi will be shedding light on the matter. Over to you, Sangita.
Thank you, Ajoy, for your kind introduction. Thank you, HKU and CFTE, for giving me the opportunity to present some key highlights from our collaborative paper, Digital Finance, Financial Inclusion, and Gender Equality. In the next few minutes, I will briefly summarize some of the key aspects of our paper. We all can comprehend that gender equality is a macro-critical issue. It is no longer just a moral imperative. It has become a foundation for a prosperous and sustainable world. The journey towards economic stability and growth is incomplete without gender inclusivity. Therefore, by prioritizing gender equality, we actually can unlock economic opportunities and foster a more equitable society. Keeping this in mind, in this paper, we aim to identify the primary factors that hinder women's financial inclusion, particularly in the financial sector and specifically in developing countries. We stress the importance of a FinTech strategy that empowers women while taking into account the country's structural and legal barriers to financial access. We analyze the significance of the Denarau Action Plan adopted by the Alliance for Financial Inclusion in achieving an inclusive post-pandemic recovery and bridging the gender gap in the financial system. We believe that an optimal gender-inclusive strategy integrates policies regarding the large-scale adoption of the digital ID, improve electronic know your customer systems, and simplify the account opening process. It further enables various methods of e-payment systems, and develop overall FinTech infrastructures that is conducive to women empowerment. So in the beginning, we ask ourselves, like, what are the barriers to gender equality in financial access, particularly for women? Despite the progress made globally towards inclusivity, women still face many systemic barriers that limit their financial empowerment. These barriers come in the form of structural challenges, such as a lack of identification, financial literacy, and digital skills, which prevents them from accessing to various financial services. Legal obstacles further compound these issues, with discrimination affecting women's ability to obtain ID and impacting their contractual employment and property rights. These barriers not only limit financial inclusion aspect for women, but also hinder their economic and social empowerment. In reducing the gender gap, the Alliance for Financial Inclusion's Denarau Action Plan marks a significant step forward. In its most recent action plan of 2022, it calls upon members to integrate gender considerations into their strategies, aiming to reduce the gender gap in economic activities. Key to this plan is modernizing digital ID systems and KYC, which is electronic know your customer, and simplifying account opening processes. Moreover, it emphasizes the necessity of a regulatory framework that accommodates diverse e-payment methods, including mobile money and the digitization of government services. These measures are vital for creating a more inclusive financial environment for women. In our paper, we highlight the use of FinTech to minimize the gender gap. To leverage FinTech for women's empowerment, we must adopt a multifaceted approach. This includes policy reforms that remove gender-based legal barriers and eradicate technology-driven biases. Moreover, addressing the digital divide is essential to ensure that women can benefit from digital financial services. By fostering an environment that supports women access to FinTech, we actually can create more equitable opportunities, economic opportunities for women. Our journey in the paper doesn't end with identifying barriers and proposing solutions. It also highlights several strategies that could be effective for developing countries to promote financial inclusion. First, we talk about building gender-sensitive national financial inclusion strategies. A women-targeted approach that focuses on interventions to address societal imbalances could provide a blueprint. Other core features of a national financial inclusion strategy could be collecting sex disaggregated data, promoting women's leadership in finance, and establishing a dedicated financial inclusion unit within the government. We also talk about innovative FinTech products for women. One example of such product is the Gender Bond, which can serve as a model for impact investment that focuses on women's empowerment. To achieve this, regulation should be in place that support and encourage the development of FinTech products designed specifically for women. These regulations should aim to protect, serve, and empower women by providing thoughtful and responsive solutions to their unique financial needs and challenges. We also envision a FinTech sandbox, a collaborative space where entrepreneurs can experiment and launch innovative financial products that can transform women's economic landscape. this vibrant hub of innovation will bring together regulation and innovation and will also ensure safety while encouraging risk-taking measures by innovators. So just to sum up the paper, the path to gender equality in digital finance and financial inclusion is complex, yet achievable. By embracing the strategies outlined in the paper, we can move closer to a world where women have equal opportunities to contribute to and benefit from the global economy. The time for action is now. Together we can build a more inclusive, equitable, and prosperous future for all. Thank you.
Thank you so much for that, Sangita. It's been a very informative and certainly illuminating session today. You've given us a great deal to think about, and it's an ongoing battle, that of gender inclusion. To our audience, if you have any further queries, please feel free to reach out to us at hkufintech.com or reach out to us on LinkedIn. Thank you for joining us. Until next time.